Hello, everyone, and thank you for joining us on today's webinar titled Resources to Fight a Housing Insecurity Crisis. Today's presenters are Beverly Young, Older Americans Policy Analyst, and Kristin Wong, Financial Analyst in CFPB's Markets. Bev, I'll hand it over to you.
Thank you, Shanell. It's a privilege to speak with you today about housing protections and resources. Thank you for the critical services you provide to older adults and people with disabilities across the nation. Here's what we'll cover today. First, we'll look at these populations and the protections that are available now. I'll talk about renters and resources for them. Then Kristin will talk about homeowners and landlords and their protections. Second, we'll talk about what you can do to help families in your community get the information they need to stay housed. And then finally, we'll take questions. Next slide. My remarks today are my own and do not represent the opinions or views of the Bureau writ large. Also, there's a great deal to learn and understand about the housing insecurity crisis, its underpinnings and solutions. So today's webinar is just a brief overview for frontline services providers like you, because you're a critical connection between people seeking help and the information they need. Slide. Okay, let's talk about housing insecurity writ large. It is a critical challenge, and as I'm sure you're aware, the CDC moratorium has ended as a result of a Supreme Court decision. Some protections remain. Meanwhile, many federal deadlines to request forbearance have been extended. So there are around 8 million families at risk of eviction or foreclosure, and Black and Hispanic households are more than twice as likely to say they've fallen behind on rent or mortgage payments. Roughly 7 million renter households have fallen behind on rent. And to keep these people in stable housing, we need to ensure that anyone who's seeking help knows where to find it. Next slide. Let's look at differential impact. The housing insecurity crisis is affecting different populations differently. These numbers come from the nationally representative U.S. Census Household Pulse Survey. On the very left, you'll see a cluster of bars that represent the share of renters reporting they're behind on rent. These are broken up by race or ethnicity. And in pink, you'll see that 22% of Black renters have reported that they're behind on rent, compared to around 11% of white renters, and that's the brown bar. The middle group is homeowners behind on mortgage payments, and here you can see the differential impact is even more pronounced. The percentage of Black homeowners behind on mortgage payments is around 11%, or 9% of Hispanic homeowners, and just 3% of white homeowners report falling behind. On the right, you have the share of all households who are behind on housing payments. And in this composite, you can see that whether they're renters or homeowners, housing instability affects a much larger proportion of people of color, and that difference is exponential. So 200, 300, 4%, 400% of the proportion of white people who are facing housing instability, no matter how you slice the cake. These numbers are quite alarming, and the responses are supported by considerable research on who works in labor markets that were most affected by COVID and who's most likely to be evicted, all things being equal. From the Household Pulse Survey, we can also see that around 190,000 renters 55 and older report that they're behind on rent, and eviction is somewhat or very likely in the next 2 months. And around 1.7 million of these homeowners report that they're behind on mortgage payments. Also, around 250,000 older homeowners report that foreclosure is likely or very likely. Next slide. So what's the answer? This is where you come in. There are protections and resources, but most of them involve a lot of steps. Those steps can be complicated, and yet millions of people need information about the help and how to access it. We've collaborated with other federal agencies to create a government-wide housing portal with help for homeowners and help for renters in plain language. But relatively few people know about the CFPB. You're among a select few. So that's why we need your help to promote these resources. And to those of you watching a recording of this webinar, you can find these resources if you search for CFPB Help for Renters or CFPB Help for Homeowners. All right, next slide. Let's talk about what we know about renters around the US. Next slide. There are many factors that affect housing instability, and that involves both demographics and what you've seen before, moratoriums or state and local protections for eviction, as well as the emergency rental assistance that's being distributed by local programs around the country. Slide. Renters are over a third of the US population, a smaller proportion of white people rent compared to people of color, and that trend has been increasing over the last 15 years. So in pink, you can see the proportion of renters from each population in 2019, and in blue, you can see where we were in 2004. So it should come as no surprise that low-income households are also most likely to rent. Next slide. With nearly 70% of people with low income renting compared to 23% of people with high income. It's also worth noting that high income earners are an increasing share of the rental market, and affordable housing is in many places giving way to high-end rentals. So next, let's look at underlying demographics. This slide is from a recent report by the U.S. Government Accountability Office and relies on data from the American Community Survey and HUD. So renters are on average older than they were before. The late middle-aged group, 50 to 64 years old, experienced the largest estimated increase in the number of rental households, an increase of around 4 million, and accounted for more than half of the total increase in renter households from 2001 through 2017. Many of these households have not recovered from the financial crisis, and this group has lower incomes and higher rentership rates than previous generations. Next, let's look at cost burden renter households. Thanks. This is a slide from the National Low-Income Housing Coalition and Justice in Aging. A higher proportion of older renters experience cost burdens as they age, with 57% of renters aged 75 and older experiencing cost burdens compared to 53% of renters aged 62 and older. Older renters may have exhausted retirement savings or maybe spending more on medical expenses, may be more likely to be living alone and bearing the entire rental burden themselves. So older renters also tend to have lower incomes than those of the general population. And when I talk about cost burden versus severely cost burden, I'm talking about people who pay more than 30% of their income for rent and utilities versus or severely cost burden households, those who whose rent and utility costs exceed 50%. Next slide, please. So how many renters are behind on rent and facing eviction during COVID? These statistics, again, come from the Household Pulse survey, and they represent the share of renters who are reporting that they're behind on rent on the left, or on the right, that they expect to be evicted in the next 2 months of those who are already behind on rent. And as you can see, people who identified as Black, Hispanic, or Latino were most likely to respond that they were behind on rent or likely to be evicted. These numbers are really alarming. And again, the responses, although subjective, are supported by considerable research. So next, we'll look at the risk of eviction across states and territories. Next slide. You can see here that the differential impact also varies by geography, with Idaho, North Dakota, Tennessee, Indiana, and Oklahoma having the highest percentage of adults who report their households are not current on rent, and reporting that that eviction is somewhat or very likely in the next 2 months. So what help is available? Let's look at the next slide for a quick overview of federal emergency rental assistance. The government is distributing billions of dollars in 2 phases, ERA 1 and ERA 2, distributed by local programs who have relatively large amount of leeway to determine their own policies and procedures. And you can see that the money can be used for unpaid rent and utilities primarily, but there's also leeway to cover future rent, moving costs, and other housing expenses, including services to help people stay housed. And finally, the payments usually have been going directly to landlords and utility companies under ERA 1. Under the next round of funding, they can also be going to people directly, even if their landlord refuses to participate. Next slide, please. So some challenges and misunderstandings that are standing in the way of ERA distribution are, of course, that people are unaware of it. And one way that people can find their local program is our rental assistance finder, which we'll talk about next. There's also a lot of doubt among both renters and landlords about whether they're eligible, what they'll need to show, and whether it's all worth the trouble. And finally, many renters, well, most renters will need some help from their landlords to apply. And so that is also standing in the way, especially if landlords aren't aware that they need to be involved in the process. Next slide, please. So let's look at the rental assistance finder developed in collaboration with Treasury, the National Low Income Housing Coalition, and other federal agencies. This finder is also available in Spanish, and you can find it at consumerfinance.gov/rent-help. And then you can also find the Spanish version at consumerfinance.gov, ayuda renta. So in the housing portal, we also have information about certain protections for certain types of federally subsidized housing, federal laws against housing discrimination, state and local tenant protections, and eviction, what to do if you're facing eviction. Next slide, please. When using the rental assistance finder, you can choose your state and county. If there is a statewide program or just a few programs, you may not you may not need to choose your county. You'll just have a listing of programs available in your state. And we encourage you to check it out. Next slide, please. There are also lots of important questions that people have about federal rental assistance, and we do our best to answer those on the federal housing portal, and you can find that also at consumerfinance.gov and help. All right. So with that, I will turn things over to Kristin.
All right, thank you so much, Bev. So my name is Kristin Wong, and I'm on our mortgage markets team. And today I'm going to talk a little bit about, all the resources that are out there specifically for homeowners. That same disclaimer that Bev said earlier also applies to me, so just keep that in mind as I'm going through these slides. All right, on to our next slide. So first, I just want to talk about how some of the resources for renters are also really important for some homeowners, and particularly our small landlords. So when we're talking about small landlords, we're talking about homeowners that own fewer than 10 rental units. So, not your big property management companies. It could be someone who lives in a duplex, or a retired couple. It could be someone for whom this is their main source of income. And, one of the reasons why we're covering small landlords is because there's just a lot of small landlords out there. They own just more than half of all rental units in the US. So it's a huge chunk of, all the units that are, out there. And something really important to know about small landlords is that they're going to be more vulnerable to rental shortfalls than a larger company because they don't have, a big balance sheet backing them up. And that's why I really want to talk about this graph that I put here today. So this graph comes from a survey that was done by Avail, which is a DIY platform for landlords in collaboration with Urban Institute. So, since it's a DIY platform, it's naturally going to be, just your small landlords. And I think it really just challenges people's idea of what a landlord is. So, you'll see that a good portion of landlords of these smaller landlords have incomes below $75,000. They may own only one property, and they may also have a mortgage on that property. And, also what is interesting from this chart is that you'll see that more of the, the more financially vulnerable landlords are Black and Hispanic. So if you're kind of looking at this issue through, a lens of racial equity, you'll see how addressing landlords' needs are, is also kind of addressing one small part of, the racial inequities in our financial system. All right, on to our next slide. So, unsurprisingly, we've seen that small landlords have been struggling during the pandemic. This chart here is also from, a survey from Avail. And, they asked, landlords, what are some policies or courses of actions that help them during COVID-19? So over a third mentioned pulling from savings, 14% mentioned using credit cards, and then some even mentioned taking out loans or getting cash from friends and family. So, definitely there are signs of distress there. On to our next slide. So, what can we do? So first, landlords should know that they can apply for rental assistance. Just, last May, Avail, through their survey, they found that 40% of independent landlords didn't even know about federal rental assistance, which is a lot. So, it's really important just to as I was talking about, just making sure that we're getting that information out there. Some important tips for, landlords to know. First, again, just kind of repeating what's, been said is that tenants may need your help to apply. So it's just really important that, that line of communication is there. Another important tip is that if your tenants are eligible, you're eligible. It's not surprising if someone's a landlord, they think, I'm not really doing that badly right now. But, if your tenant is unable to pay for their rent, you are going to be hit, you're experiencing some of that, financial hit. And then also, we know that the big property management companies are going to be applying for this, type of assistance. And so it's important that the small guys are doing it too. So it's just really important for people to know that, you are eligible for this type of assistance. The next tip I want to talk about is rental assistance can cover up to 18 months of rent. So, this is kind of getting at the point that, some eligibility requirements for rental assistance at face value might make, the program seem less attractive to landlords. So they might have to take a haircut on, the amount of missed rent, or they might have to waive some fees. But it's really important to show people that there are, more attractive options that are out there than, say, an eviction or a home sale. And we've seen that a lot of small landlords really do like their tenants and they do want to help them out. And so this is a way that they can just keep their tenant and then also recoup, some of their losses. And then finally, there's still time to apply and receive help. We mentioned there's $46.5 billion that was allocated for this, and a lot of that is still out there. So it's important that people make sure they take advantage of it. Okay, on to our next slide, please. So, Bev talked about our housing portal. There is many resources that are just dedicated specifically towards landlords. So it talks about, rental assistance, also kind of pointing people back to our rental assistance finder, setting up a payment agreement with your tenant. So, instead of going through, the assistance route, finding another way that you and your tenant can come to some sort of agreement about rent. And then also mortgage relief. And that's, what I'm going to talk about next. Of course, it applies to all homeowners. But yeah, so that will be on our next slide. So there are 3 major protections that are available for homeowners with forward mortgages. The first one is forbearance, and this is where you can temporarily pause or reduce your mortgage payment amount. This is where the most amount of people are going to have the opportunity right now to take action to protect themselves. So I'm going to spend a good amount of time talking about that. 2 other big, protections out there. There are foreclosure protections. So, up until July 31st, there was a federal foreclosure moratoria on all federally backed and GSE-backed loans. So, that those moratoria have ended. But, there are still protections out there. So CFPB issued a final rule, which basically establishes temporary safeguards to help ensure that borrowers have a meaningful opportunity to be reviewed for loss mitigation before a foreclosure begins. So that's just basically making sure that it's not just like, oh, you're behind, let's go straight to foreclosure. There's many different repayment plans or like repayment options where you can kind of take care of your forbearance that will, lead you to have, success with your mortgage later on and not go straight to foreclosure. So this is just kind of this temporary period that's open through the end of the year. And then there's also the Homeowner Assistance Fund, where Congress authorized nearly $10 billion for assistance with mortgage payments, homeowners insurance, utility payments, and other purposes. This program isn't fully off the ground, but it is something that, I want to just make sure that people have their eyes out for. All right, on to our next slide, please. So, here's where I'm going to really dig in on forbearance. So, a borrower can still request a COVID hardship forbearance. These programs are still available for you to take advantage of. And it's if you experience any hardship during the coronavirus pandemic. If you have a loan that was, covered by the CARES Act, so GSE loan, FHA, USDA, VA loan, you don't need to show any proof to get a COVID forbearance. You can just say, hey, I got, I've had some sort of COVID hardship, and your lender has to provide you with forbearance. But forbearance is not automatic. You do have to ask for it. And then, as I mentioned, most mortgages are eligible. So we have our GSE and government-backed loans. And then even if you don't have one of those loans, many private non-government backed loans still qualify for forbearance. Many servicers are still offering, some sort of program. It might not be exactly the same as the COVID programs, but there is some sort of help out there generally. And, an initial forbearance plan is going to typically last 3 to 6 months, and you can ask for extensions. But, how much time you get is going to depend on when you start your forbearance. So if you start your forbearance in like March of last year, it might look a little bit different than if you start your forbearance just now. All right, to our next slide, please. So, one thing as service providers to really look out for is that a significant number of borrowers are going to be exiting forbearance in, this fall. So it's all happening right about now. And this is basically that initial cohort that started forbearance at the beginning of the pandemic in March and April. Many of those have reached their 18-month, kind of the limit of forbearance. And so that's why we're seeing a large wave of people exiting forbearance right now. The good news is that there are many options when, people are exiting forbearance. So, let's say you didn't, you deferred your loan payments for 10 months and you had a $1,000 mortgage payment. Generally, you will not be required to pay that $10,000 right when you begin your mortgage payments again. Of course, that would be a little bit crazy, and I think, servicers understand that. So there are other options that are out there. There's a deferral or partial claim where you can put that $10,000 at, the end of your loan, and you would pay that when you refinance or when you sell your home. There's a loan modification, and that's if, you are, post-pandemic, you're not making as much as you did before the pandemic, and you are able to work with your servicer and you kind of lower your monthly payments. So instead of paying $1,000 each month, you'd be paying $900 each month. And then there's also a repayment plan. And that's where, you're actually able to pay a little bit more each month. And so instead of paying $1,000 each month, you pay, $1,100 each month until you've paid off that deferred amount. In general, I would say that the reinstatement, we've seen that reinstatements and repayment plans are generally pretty rare. So I think if you see someone and that's, their only option, that's definitely kind of something that you kind of perk your ears up and definitely look into it. For some people, if they have a private loan, that really might be all there is, but it's definitely something you would want to look into. Some other resources that are out there for borrowers is there are HUD-approved housing counseling agencies. And so if someone's kind of just looking for additional help, that's someone they can reach out to, and this help is free. So just make sure you remind borrowers that you're not going to have to pay anyone to help you avoid foreclosure. And anytime that there's, sort of distress, people are going through hard times, you're going to see a lot of bad actors come out of the woodworks, a lot of scams. And so it's just really important that people know that help is free. Don't pay anyone, you don't know. Some money to help you avoid foreclosure when there are these free HUD-approved housing counselors out there. Okay, on to our next slide, please. So as a recap, just some common misconceptions about forbearance. So first, forbearance ends with a lump sum payment. As I mentioned, we have those payment deferral options, we have repayment plans, loan modifications. So generally that shouldn't be your only option. The next misconception is my servicer will be hard to reach and will ask for proof. So, I mentioned before that ask for proof. If you have a CARES covered loan, you won't have to show any proof that you've had some sort of COVID hardship. And then in terms of being hard to reach, that definitely was the case at the very beginning of the pandemic where, people had these crazy wait times trying to reach their servicer. Honestly, everyone was pretty surprised by the pandemic. But at this point, mortgage servicers, they see the same data that we do, so they know that, people are coming and they know that people are going to need help right now. And so you should be able to reach your servicer. And then, finally, I can't afford to get help. Again, we have our HUD-approved housing counselors that provide their services at no cost to borrowers requesting forbearance. And then one final last misconception is that, there's some sort of shame, surrounded with getting forbearance. And, when we've talked with borrowers, we've kind of, seen similar themes of, this doesn't feel like, something I want to do, and, asking for help. It's really important to know that, millions of people have gotten forbearance at this point. Over 7 million people have gotten COVID forbearance. People are definitely not alone in getting a forbearance, and really no one could have predicted a pandemic of this proportion. So there's really nothing wrong with getting help, and it's there because we want people. It's important that people have this help and that they're able to use it. Okay, on to our next slide, please. And then, of course, I did also want to talk about reverse mortgages. So protections exist for homeowners with home equity conversion mortgages, which are these, HUD-insured reverse mortgages. So they work a little bit differently than your forward mortgage. But, so you're not making monthly payments, but there are certain things you do need to do to keep your loan in good standing. And basically preventing your lender or servicer from calling your loan due and payable. And that's basically when they ask you to, pay back, anything equity that you've extracted from your home. And so these things are, you need to make sure that you're keeping up with, taxes and insurance. you're keeping your property, up and making sure it's, up to date. And also you need to be living in your home. So of course, during the COVID pandemic, there's many reasons why these things might be hard to do. So some things, if you're facing trouble, you can delay calling your loan due and payable for up to 6 months with an additional 6-month extension if needed. If you ask for your extension, like, earlier in the pandemic, you can also get additional time. But the point is, you'll be able to ask for a little bit of time before, foreclosure begins. There was a foreclosure moratoria that, went through July 31st, that ended. If, you've kind of reached the end of your extensions and you're still having trouble with, say you're like property taxes or insurance, you can reach out to your servicer. You're actually encouraged to reach out to your servicer to, see if there's something, repayment plan you can work out. There are repayment plan options available, and, servicers and lenders, they do want to provide these, but you do need to reach out to your lender or servicer to get a repayment plan. So I think, the big picture here is just make sure you're like staying in contact with your servicer, because once you don't do that, that's kind of when scary things could potentially happen. And that applies to both, reverse mortgages and forward mortgages. All right, to our next slide. So, as we have information for renters, we have information for landlords, we also have information for homeowners on our housing portal. There's, basically the same type of stuff we talked about just now. So learning about, what forbearance is, how it works, what are your options for extending your forbearance, how you might be able to exit your forbearance, just how you can find out what type of loan you have, how you would request forbearance, and then all this information is in plain language. So you don't have to know like all about mortgages to understand. It's definitely rents or someone who is, kind of coming to this information fresh. So yeah, I really suggest people, if they have any questions, to go check out our website. And then to our next slide. And then, we have videos in case you're just, not really into reading all the text. If you're more of a visual learner, if you like your videos, we also have some videos that, talk about, how do you do forbearance, a little bit more details on the steps to ask for forbearance. Those are in English and Spanish. And then, I think Beverly mentioned have just general information that it's written in other languages on our website. So we have written information in Spanish, Chinese, Vietnamese, Korean, Tagalog, and Arabic. So yeah, tons of information there. Again, really suggest people check it out. And with that, I will pass it on to Bev.
Thank you, Kristin. That's such critical information, and we realize it's a lot to digest and also to share. So just a reminder that you can access all these resources online. Just search for CFPB Help for Homeowners or CFPB Help for Renters. Now to talk about our Housing Insecurity Media Toolkit. You can use our toolkit, which has emails, social media posts, videos, and social media images, all with simple graphics and a call to action, which points to our housing hub. And we have information for both homeowners and renters in there. So please share them with your networks, share them with the people that you serve, and give us feedback on what we could do better. We appreciate it very much. Finally, I'd like to make a plug for our consumer response function, aka submit a complaint. As frontline service providers, you can encourage the people you serve to submit a complaint if a debt collector is using an unfair practice when collecting a debt. Federal law says debt collectors can't use unfair or deceptive practices to try and collect a debt. And this means that they may be breaking federal law if they harass you or your clients, make false or misleading statements to collect rental debt. And your complaints give us insights into problems that people are experiencing to help us regulate consumer financial products and services, enforce the federal consumer financial laws, and educate and empower consumers to make informed financial decisions. You can submit a complaint at consumerfinance.gov/complaint. And now I'll turn things back to Shanell.
Great. Thank you so much, Bev and Kristin. We do have a few questions. This one says, it seems like the first one, I'm sorry, there seems to be a disconnect between this information for homeowners and renters. How do you suggest we get this information into people's hands?
I'll take this one. So that's so true. And the social media toolkit is a start because it has these emails and templates, flyers and videos that you can share the word you can use to share the word in your own communities. We've also launched a campaign to share these resources through public service announcements, and in collaboration with HUD, Catholic Charities, United Way, HHS Administration on Community Living, and many others. We've provided housing counselors, local service, social service agencies, food bank operators, and other people who serve the aging and disability communities with tools and resources. Kristin, is there anything you wanted to add?
So I think that was a great overview. I would say for homeowners, it's also just really important that they are, reaching out to their servicers and lenders. They are also really just trying to get information out to, the borrowers. And so just, if there's anything that people take away from today, is that, it's really important that people are communicating with their servicer.
Great, thank you. Another question about whether there will be a recording of this webinar and will slides be sent out. So we will not be sending out any of the slides. If you do want a copy of the slides, you can email us at olderamericans@cfpb.gov. And you can also check back to that same address, consumerfinance.gov/olderamericans in the coming days, and the webinar will be posted there in our webinar archive. I think there was one more question on eviction moratoriums. That was about the eviction moratoriums keep changing all of the time. And the question is, is there a website that has the most up-to-date information?
Great question again. So we've published a list of states providing eviction protections and expiration dates for those protections. That list can be found on our Housing Hub as well. Again, search for CFPB Help for Renters, and then navigate to what to do if you're facing eviction to see that list. For more local protections, you can also visit nolo.com. It's not the only source for this information, and we can't vouch for the accuracy of information on other websites, but it's one source for that information too.
Great, thank you so much. Another question, are these resources provided to unemployment offices and homeless shelters? I know logistics may be a bit difficult.
Good point. So we have been collaborating with Health and Human Services, HHS, to get these resources out to local providers such as community health centers. HUD has also been spreading the word and making these resources available to counselors. And there's more that can be done, I'm sure. You're an important link in this chain. And so if you can share this information with people in your communities, you're connecting them with the resources they need. As I mentioned before, we've also been promoting this information through other partners at Treasury, Catholic Charities, United Way, and other organizations that work directly with landlords.
Great, thanks again, Bev. Kristin, I think this next question is for you. If a borrower initially took advantage of a forbearance plan due to COVID and started paying back, but then had another COVID-related hardship later, if they requested and are able to obtain another forbearance plan, is the lender still required to report on their credit report that the loan is in good standing and in forbearance? I hope all of that was clear.
All right, sure, yes, I can tackle this. So if, a borrower was in forbearance and maybe they only, did a couple months of forbearance, and they, exited forbearance and then they reached some another hardship, you're definitely going to be able to restart. The only limit on your time in forbearance is kind of your maximum number of forbearance that's available to you. If you had a little break in between your two bouts of forbearance and you saw that as you were coming up on your next month, you're facing some sort of hardship, you want to go back to forbearance, and you don't miss any payments, they are required to still report that the loan is in good standing. If in between your bouts of forbearance you missed a payment, they would have to report that you had that missed payment. So it really depends on what your how behind you are, what standing you are before you enter forbearance, whether that's a restart or your initial forbearance.
Okay, thank you, Kristin. Here's another one. The rent help program funding is lagging about 60 to 90 days behind. Do you know of a good contact to move this program forward?
I can take this one. So since this is a new federal program and local program delivery has in most cases been built from scratch, Treasury has built a suite of tools and resources to encourage best practices. And to find that, you can search for Treasury promising practices for ERA programs. The federal ERA program, as I mentioned before, is administered by Treasury. And we can also pass information along to Treasury. You can also use the email address iga@cfpb.gov to send corrections to program information in the rental assistance finder. I hope that helps.
Okay, there are no more questions at the moment. Let's see. I think there's one more question to ask. What is the easiest way to locate a housing counselor?
Yeah, I can talk about that. On our website, we actually have a little tool, Find a Housing Counselor. So you can navigate to it through our, housing portal, or you can remind it. I'll just kind of read it out. Hope that's helpful for folks. So you can find it at consumerfinance.gov/find-a-housing-counselor. But you can also just Google, find a housing counselor, CFPB, and hopefully it'll take you to the tool.
Great advice. Is there a minimum amount of rent that the person must pay before they can seek rental assistance?
Another great question. So the short answer is no. But to back up, Treasury has been giving local programs guidance on how to use ERA funds. And the funding comes from two different laws. So they're distributed in two rounds. The guidance is different for each round. So I've referred to them as ERA 1 and ERA 2. Under ERA 1 guidance, Treasury allows local programs to help with future rent as long as they help with any back rent that may be owed. Under ERA 2, local programs can help with future rent as long as the obligation is clear. So, for instance, you can show, you may be able to show them a new signed lease in order to show that obligation, and they can agree to pay future rent to help ensure housing stability. They can also help with short-term stays at a motel or hotel, moving costs, security deposits, and future rent. Finally, programs can also provide additional payments that encourage landlords to rent to people and families who they might not otherwise rent to, whether because of the rent they owe, past evictions, or other credit history and factors that make them hard to house.
Great, thanks, Bev. It appears that VA loans are not eligible for adding the amount owed to the balance in repay when the loan is due at maturity, refinanced, or sold. Can you elaborate on this?
Yeah, I can take that. So generally, if you have a VA loan, you should be eligible to get, this type of forbearance exit option. So, a partial claim where you can just put, whatever deferred payments at the end of your loan. But I will say that, every person's, case is unique. So, in a, individual's case, it might be that they're not able to get a partial claim. And so, at this point, it's definitely, important that people reach out, to maybe a housing counselor to get more information on how to navigate that.
Great, thank you, Kristin. So it seems like that's it for all of the questions, and thank you for entering all those great questions. If you enjoyed the webinar, please do join us again on Wednesday, October 27th at 3 p.m. for a webinar on preventing elder abuse, help for long-term care communities. Thank you again to our presenters, Beverly Young and Kristin Wong. This is very much needed information, and hopefully it will be of good use to you and the people that you serve in your communities. And thank you again to all of you who attended today's webinar. We look forward to seeing you again. Thanks and have a great day.